Hey, Tim Sykes here, and I am filming a video reviewing my 2 latest trades on my weekend newsletter. This is my most consistent newsletter. Why? Because I have the patience of an ant, and with my weekend newsletter, the goal is to hold the stocks over the weekend. I still have some problems. Sometimes I take some profits, as you'll hear, on Fridays, but at the same time, I'm trying to hold over the weekend. And by trying to hold over the weekend, I usually give the trades more time. The trades have been crushing it now for 2+ decades. But more important than just my consistency, I want you to learn how I try to improve trade after trade after trade, because this is what it's all about for you as a student. It's not just about any one trade. It's can you string together enough trades, not just all successful trades, but trade after trade and learn. And you gradually improve and you optimize your trading process over time. That's the key. I'm here in Europe with so many millionaire traders. And if you listen to them talk, it's not about how much money they make on any one trade. It's can they refine and optimize the process so they can size up later on. That's my job as a teacher. So let me review these 2 trades. This was 2 weeks ago on ASTI, and they had a huge spike on a NASA deal. ASTI is like this wannabe space play. They have so many promoters. They do so many financings. You can see here, I'm going to pull up all the news. Like, look at all of this. This is not just all contracts. They got one NASA contract, which is very good. You know, it's good that NASA is working with them, so that's a big legitimizer for the company. But at the same time, they're so shady and they have so many cash needs. So even on that spike, it wasn't really good to chase it, although it was pretty choppy and you could have bought the dip, which is exactly what I did. But I actually had a loss on this overall. Why? Because I bought this was 2 weekends ago, in the low 3s, and I was dip buying it after the stock had already hit the low 5s on the NASA deal. But that's the choppiness that this kind of stock has. I'm literally buying it $2 a share off of its highs, and I think that this is going to be a good weekend play. I'm buying this 3:22 p.m. Eastern, so just before the 4 p.m. market close. But it bounced a little bit into the close, 50 cents a share, which was pretty much my entire goal for buying this stock. So if my goal is already met on that Friday, I don't have to take the overnight or over the weekend risk, so I sold some. My mistake, as you'll see in a second, was not selling all. But I wanted to just take some profits, lock it in just in case. Let me show you the chart here. It was right here, and it got up a nice little bounce midday, and then this was in the afternoon. And you can see here that it kind of double topped here at 370-ish. And again, in hindsight, I should have taken all the profits, but I thought that, hey, this is heading in the right direction. Maybe this will go back to the 4s, if not the 5s, over the weekend. So I sold some, locked in roughly $1,500 in profits. That's a good start. It came all the way back down to my entry price. And I thought, wow, this is a choppy stock, so let me try to buy near the low of the range and sell at the top of the range. I should theoretically have 2 profits, kind of for the price of 1. But as it turned out, I did rebuy it, into the close. But at the same time, Monday morning came around and it was not gapping up. I got a little unlucky with the whole overall market dropping, but the market has been choppy lately, so you can't rely on a strong market open. And I had a loss on my position over the weekend. So I turned a $1,500 gain into a $500 loss, roughly a swing of $2,000. Not great, but also not the end of the world. In hindsight, obviously you could say, yeah, I should have sold everything. But at the same time, I thought that it could go higher. I didn't know that it was going to hit a perfect double top here. It actually did, by the way, on Monday morning, go back to 340. So I could have had a profit on that one. I was unprepared. I did not have internet access right here pre-market on Monday morning, and that was my fault. And to tell you the truth, even if I had internet access, I don't know if I would have sold it here, because I would have been like, wow, this thing is spiking again. Let's see if it can get back to 370, which it couldn't. So there were multiple opportunities to take profits either into the close on Friday or pre-market Monday. I didn't take either, and I sold it for a loss right near the open. The one good thing though, some people say why not give it more time? It didn't do what I wanted. So when it doesn't do what I want, I just cut it and I accept the loss. But if you are not stubborn and you accept the loss, small losses are fine. I hope that everyone understands that. Leave a comment underneath this video. Say small losses are fine. Small losses are part of the strategy, which is true. You're not going to be right every time. If you look at thousands of my trades and now thousands or even tens of thousands of my student trades, we're not right 100% of the time. In fact, a lot of my best students are right 40 or 50% of the time, even less than 50%. And you might say, wow, how are your top students making millions by being right 40 or 50% of the time? I mean, that's not even the majority of the time, because their losses are small compared to their gains. The whole key to making millions is not being right 100% of the time, or even 90 or 80% of the time. The key to making millions is controlling your losses and having your gains be bigger than your losses. So I know it's not fun. Everybody wants to be right all the time. That's just not realistic. So I accepted this. It wasn't, my finest moment, but again, it's part of the strategy. If I can teach you to learn how to lose small, you will succeed in the long run. I know it sounds bad. You're going to teach me to be a loser? Yes, I'm going to teach you to be a loser, okay? But a small loser. Why? Because look at this. The very next week, this past Friday, I had a $2,000 profit on SONN. And this was a very similar setup, which I'll go over in a second. But notice my gain is roughly 5 times or 4 times the size of my losses. So if you can make 4 or 5 times the size of your losses on every other trade, you could be right 50% of the time and your account will grow. So what did I do differently on SONN? Well, because of ASTI, because I recognize that this is such a choppy market, I'm taking all the profits and I'm not looking back. So SONN right here, the news came out, they actually did a financing. So financings are kind of usually a bad thing for these small companies. They pump up their stock with positive press, or they pump up the stock with promoters, but at the same time, they're trying to raise capital. And when they pump up the stock, they're trying to dump it. If you know the phrase pump and dump. So they're pumping up their stock so they can dump it. Pump and dumps are illegal, but in this sense, with these little wannabe biotechs, the companies need cash to survive. So a lot of short sellers hate on these companies. They say, never buy these companies. They're all so terrible. They need cash to survive. They're like the bottom of the barrel. I agree, they are the bottom of the barrel. They are long shots, but especially with a lot of these biotechs, if they don't have cash, they go out of business. So I don't blame them for trying to raise cash. In SONN, the reason why it spiked here is because it wasn't a traditional financing. They actually sold shares right at the market, which, again, it's not a good thing. They're diluting their existing shareholders. But again, if they don't raise the cash, they're out of business. So when the stock is trading, at around $1 a share, it's priced near bankruptcy. That's what you guys have to understand. All of these stocks trading at 50 cents, $1, or even sometimes $3 or $4 a share with a small market cap, they're priced very low because they're long shots. Like if you went to a racetrack, these would be like the 50-to-1 long shots. Why? Because they don't have much cash. So just the fact that SONN was even able to raise cash, I think they raised $2 million, that says a lot that somebody actually wants to invest in this piece of crap company. I'm sorry to call them that, but it's true. So the stock actually spiked quite a bit on that news. You can see here it spiked from $1.19 all the way up to $3.10. So the stock basically doubled in 2 hours, which is a very good sign. And it held its gains, and it actually went even higher into the close and after hours. And here's where it gets interesting, because the very next day, which was, last Thursday, because the market was closed for July 4th. I hope you had a good July 4th weekend. It closed right around here at $4 a share. And $4 a share is where it kind of like triple topped before. So it's a little risky to say, hey, this thing is necessarily going to break $4 a share. But this is what I did. Remember, ASTI spiked all the way up to $5. I was buying it on the dip in, where was it? One of these dips, right in here. Right in here, right in this mess. Yeah, right here before the market closed. Sorry, it's difficult with these after hours charts. I know we're not used to having a lot of after hours runners lately, but now we're having pre-market and after hours runners. But I'm buying it $2 a share off the high. And again, we got this little bounce up here. Theoretically, I should have sold everything. But at the same time, I'm just happy that I was getting it on the dip because these things have so much range. So for SONN, remember, this stock, the news is already out, which is very good. I don't want to be guessing news. The stock had already hit the 460s when I'm looking to dip buy it, okay? So for me, I'm really excited that I can get in on this stock in the 370s. So I'm buying it nearly $1 a share off the high. I said, this is my speculative over the weekend play. The market is closed. You know, the stock market closes in less than an hour from now. So I was buying it around 12:15 p.m. because the market closed at 1 p.m. Eastern. And I said, this ran big after hours, so let's see if it can do it again. If you have been watching SON, this did run big the previous day. So for me, this wasn't even just same day news. This was more of a news is already out kind of play, and it has a history of spiking big into the close and after hours. I missed this first one, where was it? Right in here. So this was the after hours run up on the 2nd. I'm sorry, it's all confusing because of the stock market holiday. But the news came out, the stock doubled, came down, and then into the close, it actually broke out from 3 all the way up to 450. This was after hours, okay? And this was all in the first like 10 minutes of after hours. So this thing ran so much into the close and after hours. Into the close at roughly, what time did I buy it? 12:15 p.m. So 45 minutes to go into the holiday right in here. I'm thinking that it can pull off another one of these. Now, again, I don't know if it's going to, but the news is already out. We have these runners, and it previously just ran the previous day. So former runners can run again. Leave that comment below too. There's multiple lessons here, but one of the lessons is that small losses are okay. Another lesson is former runners can run again. ASTI was a former runner from many days, many weeks ago. SONN was a former runner from the previous day. So again, notice how I said this is a speculative over the weekend play. I didn't know it was going to spike big. I didn't know the timing. I just thought that it had a good chance of being able to spike big again. So I said, let's see if it can do it again. It's perking up goals to sell in the 4s, possibly the 5s if it can squeeze enough. And I said cut losses if it can't reclaim 4-ish, okay? So for me, I wanted it to spike into the close. I wanted it to run big into the close. I don't know if it's gonna happen. I'm just playing the odds. And roughly 30 minutes later, it did get up to the 4s. And here's where I had kind of a questionable decision where it was up, but it wasn't up that much compared to what I wanted. I thought that it could run more. But again, I didn't take all the profits on ASTI the previous week. So I'm conflicted because I'm like, I think this can run more, but I traded ASTI too aggressively and that caused losses. So I split the difference and I sold roughly 3/4 of my position. So again, there's no magic number like should you cut your position in half, should you sell all? You have to make that choice for yourself. But because I was too aggressive on ASTI, I didn't want to make that mistake here, okay? So I locked in roughly 40 cents a share. I made back the losses on ASTI, but I just played it safe. And that's what I think any of us can do, although it's not that much fun. It's not much fun to cut losses quickly. It's not much fun to take profits when it hasn't necessarily hit your goals, but you can always be safe. And I think being safe is a very underutilized strategy. So I sold a little sum right here before the close, and I was happy. I was happy to take 1,500 shares into the weekend. I was actually here in Europe with Stratty, one of the students who's an inner circle mentor, and he's closing in on $1 million. He was actually trying to ride this, and he didn't have a great week trading, so he didn't take this. I think he had, I want to say he had like 10 or 20,000 shares in like the 330s, and I think he dumped it in the 350s. He still made some money, but it was disappointing. He didn't want to chase it. But for me, again, going back to what I said in the beginning of this newsletter, I said, guess what? I want to give these weekend plays more time. I'm not looking to sell them same day. I'm only adapting because ASTI, I traded a little too aggressively and I gave it too much time. In hindsight, I should have sold everything. With this one, I think that it can keep going, but again, I want to just lock in some profits. So I was all ready to say, okay, goodbye for the holiday weekend. I said, happy 4th, everyone have a great holiday weekend. I'm looking to hold this play over the holiday weekend. But again, the market forced my hand. A little over an hour and a half later, the stock got all the way up here to 470s, okay? And I literally wasn't even watching. I wasn't even trying to sell it there. But I was like, you know what? I mean, this is best case scenario. I knew that my profit was roughly $2,000. So between these two trades, I'm up roughly $1,500, which is actually my average per trade over 25 years. So I knew that I could lock it in. I also knew, look at this, 470s is not just a random number. This is a potential double top here at 470, 475-ish. Remember ASTI when it tried to come back it double topped here at 360, 370-ish. I did not take all my profits that time. So with SONN, yes, I want to give it more time. Yes, I already wished everyone a happy holiday. But at the same time, the market forced my hand. And I said, you know what? Let me lock in the profits. I don't want to be stressed over the holiday weekend. What if this is another double top? What if ASTI is trying to teach me something? Why don't I just lock this in and be stress-free? I know some of you have already messaged me, say, come on, Tim, this is a weekend play. You're supposed to hold over the weekend. Trading, you can do whatever you want. My goal was to hold over the weekend. I mean, I literally said, have a good holiday weekend, everybody. I basically signed off. But when the market came to me and I saw my profit and I analyzed my own issues where I was too over-aggressive on ASTI, I said, why not? Let me take a profit. That's the beauty of trading, okay? Trading, you can be very flexible. And so I took the profits in the 460s. I didn't get quite the 470s because, I just wasn't prepared. I was like, had to turn on my software. I had to reboot everything. I really wasn't prepared to sell. But I did take the sell because it hit my goals. And, I made roughly 14% overall. So I learned from the losses on ASTI, I adapted, and I profited on SONN. My profits outweighed my losses 4-1, which is very good. And I think this is a good case of adapting from one trade that didn't do so well, and then you're adapting to, for me, this was the very next weekend trade. It might not always be the very next trade of a strategy, but this is the kind of thing that you should try to do. Every trade, try to do your best. Every trade, try to learn from the previous trade, and ideally, your profits outweigh your losses. That's when your account grows and your knowledge account grows. For me, I'm trading with a small account. Remember, I'm donating all of these trading profits to charity. I'm not doing this for the money in trading. I want to show you the process. Like I said, I'm here in Europe, not just with 7-figure traders, but 8- and 9-figure traders too. And I want you to understand that they're not interested in the profits. None of the 8 and 9 figures, and 8 and 9-figure traders, mind you, they've made $10 million plus. Some have made $100 million plus. They never talked size. It doesn't matter. Why? Because it's the same trade, whether they have 1,000 shares, whether they have 1,000,000 shares. That's the key, learning from this process. So yes, I lost roughly 500 on one trade, made roughly 2,000 on the next trade. But if I did the same kind of trade with a bigger account, I could have lost, let's say, $50,000 and then made $200,000. So it's the same ratio. And I know that's difficult for people to understand, but this is the beauty of trading. That's how so many of my millionaire students have grown their accounts exponentially. That's why I love trading. It's not like going to a job where even if you're employee of the month or employee of the year, what are you going to get? A 10 or 20% raise. You can literally grow your account hundreds and even thousands of percentage points year over year. But you have to really refine your process first. This is why I like trading small. This is why I like showing every trade and learning from my losses. You might think that, a $500 loss on ASTI is too much. Okay, so size down. You don't necessarily need to trade with the same size that I'm trading with. Maybe you lose $50 on a trade like ASTI. Maybe you lose $5. But the point remains, you're trying to refine your process, trying to cut losses quickly, trying to make bigger gains. Your account grows, your knowledge account grows, and you learn from every trade. Maybe on the next trade, maybe I'll size back down. As we get more into summer, we get choppier and choppier trading. That's going to influence my trading. Or if there's a perfect play, I might say, you know what? All my indicators are lined up. Let me be a little more aggressive and I'll take more size. Every single trade is slightly different and you have to try to optimize based on the indicators available to you during that trade. It's not one size fits all. You shouldn't have to take the same amount of dollar risk or the same trading size for every single trade. Just try to learn from the setup, try to learn from your recent trades and adapt. Leave a comment below. Let me know if this lesson makes sense. I'm very happy. Congrats to all my weekend newsletter subscribers. I mean, both these plays offered plenty of upside. I don't think you could have screwed ASTI up more than I did. And SONN, again, we'll see what it does next week. But so far, it's a double top in the 460s, 470s. Guess what? If it breaks 460s, 470s, it can still go to the 5s. So I'll alert you based on what I see happening. But so far, I'm happy with my trade. I hope you learned from it.